The first reason why you should be buying stocks is if you want to grow your money. Notice how it didn't say get rich quick, and there are ways for you to make money in the short term, and there are also ways for you to make money over the long term. But if your goal is to grow your money, you can do that through the stock market, because now you can take your money and invest it into companies, so you own a piece of these companies, and as these companies grow, so do you. And this brings me to number 2. If you want to invest your money in stocks and do it successfully, you also have to have a strategy when it comes to growing your money. So kind of like I mentioned before, there's a couple different ways that you can make money in the stock market on the broad level. You can make money over the long term, and then you can make money over the short term. So your short term people are your traders, your long term people are your long term, more kind of fundamental investors. Let me go a little bit deeper into these. When we talk about making money in the short term, this is when you're buying and selling a stock within less than a year. There's a whole bunch of different short-term investing or trading strategies here. You have day traders, you have people that are looking at momentum, you have people that are swing traders, and so you have dozens of short-term strategies. And so you want to find the strategy that's best for you. So when you think of short-term trading, these are the people that are looking at stock charts. These are the people that are looking at those candles and those really crazy and fancy looking charts, because they're trying to find the next kind of breakout, the next opportunity where a stock is going to rally very quickly. With this short-term trading, you can make a lot of money in the short term. And you have to understand that in this, there's also more risk, because you're looking at things, you're looking at momentum, you're looking at charts to see where you think the stock is going to go over the next 3 months, over the next 30 days, or over the next 3 hours. Here on the long-term side, you don't really care too much about the charts. If you are a long-term trader, what you're looking at is the underlying value of the company. You're looking at the numbers now. You're looking at the fundamentals. You're looking at the profit. You're looking at the revenue. You're looking at the cash flow. You're looking at the new products that are coming out. You're looking at the executives. So you're looking at a company and you're looking at, okay, I think this company has a lot of room to grow in the profit, and I think at its current stock price, this company is undervalued. I think this company is worth more than $3 billion or whatever it is right now. And so because of that, and because of the new future potential, you want to invest in this company, and you're going to invest it for the long term, which is at least 1 year. Many times when people talk about a long-term analysis, this could be in a decade or multiple decades. And so when you're looking at companies and you're buying them for the long term, you want to find an undervalued company and hold on to it for a long time. And so even if a company goes down, you're not going to be selling here because you believe in the long-term value of the company. Now, you want to make sure that you're keeping up with the earnings calls. You want to make sure that you're keeping up with how much money this company is making, because if something changes, then you might want to change your strategy. But the issue that so many new investors and traders have is they don't understand the difference between long-term investing and short-term trading. And so what do? They come in and they think, okay, I'm going to find some great companies that I believe in, and I'm going to be a long-term investor. And then something goes wrong. The stock starts to go down a little bit, and then they panic, and then they sell. Now, all of a sudden, you went from a long-term investor to a short-term trader because you panicked and you sold. So it's a psychology, kind of like what I talked about before. And so you have to understand, if you are a long-term investor and nothing has changed fundamentally, just the stock price has changed, then you got to understand where you are in this equation. Likewise, here, if you are a short-term trader and you're looking to make money in the short term and this company shoots up 50%, now you tell yourself, yeah, I hit my goals of where I wanted to sell, but I think this company is really good and I think the stock is going to continue to go up, so why should I sell right now? And so you hold on to your stock longer than you think, and then what happens is the stock price corrects because it went up way too fast, way too quickly, and then the stock price starts to go down, and now you lost out on a big chunk of your profits. What you have to understand is you can be right about a company and still lose money. And so when you're investing your money in the stock market, you got to understand that stock prices don't always equate to what's going on with the company right now. And so if you're investing your money here or here, you have to understand what's going on in the stock that is different than the company, which is why your strategy is so important. And you have to know this before you actually go in, because you want to know when you're going to sell and what is going to be your kind of risk parameters, because if things start to go bad, are you going to sell? Here, if the stock price goes down, you might not want to sell it because that might be an opportunity for you to come and buy more. But here, there has to be an exit strategy, because if you're investing for the short term, you don't want to get in love with the company. You're just trying to make your profits quickly. And the third reason why you should be buying stocks is if you are ready for the emotional roller coaster. If you're ready for the ride, you already beat half the battle when it comes to putting your money in the stock market. Now all you got to do is figure out your strategy. Are you a trader? Do you have time for that? If so, what is going to be your short-term strategy and how are you going to follow through with it? If not, then if you're going to be a long-term investor, what type of companies do you want to invest in? How do you find these investments? If you don't want to put in all the work to find the right companies, then you can invest in ETFs. An ETF is a basket of stocks. That way now you don't have to do the work to keep up with one company or two companies. Now you can invest in ETF where you have exposure to a whole bunch of different companies. And you have ETFs that give you exposure to the whole stock market. You have ETFs that give you exposure to certain sectors like the tech sector or the healthcare sector or dividend ETFs. And so once you know what type of strategy you want, now it's all execution. But this is one of the toughest battles that most people do not talk about when it comes to putting your money in the stock market, because you have to be mentally ready for the war that you're going to fight when things go up and when things go down. Because when things go up, you don't want to get greedy. And when things go down, you got to know when it's time to sell and cut your losses. If you enjoyed this clip and you want to continue your financial education journey, I have another video that I think you'll love. All you got to do is click that button right over there. And for those of you who want to stay up to date on the top finance and business news, you can join Market Briefs, my free financial newsletter, by clicking that button below. Thank you for watching, and I'll see you in the next one.